Good morning, traders. It's Wednesday, February the 10th. Taking a look at the charts, we've got the SP 500 futures. This is the daily chart. And you can see here yesterday, the last couple of days, we've been struggling to put in a bottom here. We've had a couple cycles. We had all of our cycles bottoming it out here, showing that we should have an imminent bottom and a strong recovery. And if we do get that, we're going to see probably the safe havens correct and pull back. Now, this type of play that we're seeing right now is very similar to what we've seen right here. And I think that's kind of right where we're at. And now we're just trying to see if the market can recover, because the market is trying to hold this critical support zone right across here from the previous lows in August. If these levels are broken, then it could be lights out and we could see a huge move to the downside. But right now it looks like we're starting to get a bounce. Today equities are up over 1.1%, seeing a pretty strong recovery here. We have Janet Yellen testifying today at 10 o'clock, so it's going to be, or they got the statements and then testifying later. So it'll be probably a pretty volatile session again, but overall we're seeing the market move up. And of course, this is what we wanted. Down here, we were hoping the market was going to move up much further, and instead it was kind of muted because we do have a overall long-term cycles holding price down, so it's kind of muting the strength, and I'm not sure how much this will recover. Ideally, I'd like to see this come all the way back up to the 1975, potentially the 2010 level, somewhere deep into these pivot lows over time, and then eventually roll over and really break down. But that may not happen. The way the market has been moving, it's showing some pretty serious downside pressure whenever we have some buying. So instead of going long equities yesterday, we actually did the inverse. That if the equities start to bounce up, then we actually took a play where we see safe havens pull back. So we actually shorted gold using an inverse ETF. If we take a look at gold, you can see how gold went parabolic straight up, and the GLD actually I think shows it perfectly. Yesterday morning I talked about how the gold was trading way up here, and that usually after we have a big pop like that, we see the masses pile in the next day, and we usually see a gap to the upside. A pop and drop is what I called it. And then we see it pop higher, and then we see it sell down and put in a top, and we start to see price sell off. Very similar to what we saw back here, where you see it pop higher and then sell off and pull back. So that's what I feel as though is going to happen. Yesterday at the open there, we got more or less short gold using an inverse fund, and it sold off, and hopefully we see that continue to move down. And we are seeing gold trade down 1.2% in pre-market, so it is trading even lower again, continuing its slide. Now if we take a look at miners, you can see we had a huge reversal to the downside. It popped higher, sold off. Nice big move there. Obviously, miners are much more volatile than gold itself, so on a percentage basis, they will move a lot more. And of course, you can see here, miners in the last 4 days just exploded in value straight up. And you know the general rule, what goes straight up usually comes straight back down, and that's what we are anticipating for both gold, miners, and also silver. Taking a look at another safe haven, bonds, we've seen bonds rocket up in value. And this morning we are seeing bonds continue to pull back a little bit more, down 0.4%. And we might see this kind of fade back down and come down as the stock market kind of rallies. So there's potential for bonds to pull back. Now, eventually, back in early September in my own personal account, my long-term investing account, I ended up getting long mostly bonds and going to cash with my long-term capital. So what we're looking for now with the Golden Oil Guy users, we've seen bonds have a huge run up already. So what we're looking for here is a pullback in bonds and a pullback in gold for us to get long some long-term ETFs for the next major bull market, I think, in bonds and precious metals. And we're waiting for stocks to recover and move up like I just showed you with the SP 500 here. If we could see a nice big bounce and kind of movement going forward here, it'll be our new entry point for some long-term inverse ETFs. Right now, we don't really want to jump short right at this point. Ideally, we'd like to see price come up and break these highs and kind of unwind and see it come up to this 2,210 potentially mark, which would bring us into the end of March, I think. And then we could see it top out and sell off. We'll see how things unfold, but that is the plan. Ideally, long term, we want to be long bonds, long metals, and short stocks. Now let's just jump over to energies real quick. Talked about crude oil the last few days, how we had the support neckline here that was broken yesterday, it gave way. Big drop there in crude oil, down about 5.5% yesterday. Seeing a little bit of an oversold pop and bounce. Again, we've got a downside target testing this 2650 area, but I do feel as though we could see it squeeze lower and move to the lower 20s, possibly $24 per barrel. So overall, I think we're going to see it continue to unwind. We'll see if this has a little bit of pop and fade back up, and we'll watch the intraday charts. It could be an opportunity for us to actually take an inverse short play as we see a little relief bounce here as it comes up to resistance around the 2970 area, and then we could short it in anticipation of it coming down to this level and then eventually breaking it and making a new low. Looking at natural gas, we're just kind of letting it be right now. We're letting it kind of flag itself out, build itself some type of base or a bottoming formation. Ideally, I'd like to see it kind of flush down to the 190, 185 area, which was our original downside target, and that'll give us a 5-wave correction and probably set us up for a new move higher. But right now it's had a little pop. It's got a tight little bull flag. It's coming down to fill this gap that it had, and it might end up pushing higher and building a little base somewhere up here that could give us an opportunity to get long going forward. All right, let's just take a quick look at the Toronto Stock Exchange, the TSX Composite. This is, let me zoom out a bit so you get a better feel of where we're at. Toronto Stock Exchange topped out a long time ago. It's broke its critical support zone, has been kind of free falling. Of course, crude oil really speeding up the process for the Canadian stocks to enter a bear market. You can see here, let's just zoom out a bit more there. You can see we had this critical support line right through here, and it came down, broke that level, traded through it, and then we've seen it have that second half of the move down. If we were to just do a Fibonacci extension, we could probably almost get a dead-on move. Let's see where that is. So we got the low to the high. Depending where you draw the lines, you can see Toronto Stock Exchange almost came down. This candle wick, you could argue big extreme wicks like that, you might as well go to the closing price where it is. Overall, you can see we pretty much hit that measured move to the downside, and we're starting to see it bounce back up to the 618 and also these spike lows here and these previous highs. So we've come up to resistance. It started to pull back. I still think we're going to see the Toronto Stock Exchange flounder. I think crude oil is going to underperform for a long time. I think at best we see the Toronto Stock Exchange chop sideways here for a long time, very similar to what we saw in 2011, 2012, where it really traded sideways. And of course, if we go back in time even more to 2008, 2009, I think we could see it do something very similar to this, where we see the market kind of chop sideways for a while, potentially start to make even a lower range. And that's kind of where we're at. We're at this level here. We might even might even see it work down to the lower end of this range. Because what happens is we won't see the Canadian stock market really bottom until the US stock market bottoms. So I think we could see the Canadian market, if it doesn't continue to free fall and move much, much further down, at best, it's going to chop here and be very volatile, and or we'll see it just continue to struggle for potentially another 6, 8, 12 months going forward. Now, if we take a look, let me just zoom in back to this chart here. You can see here we're overall pulling down, not the prettiest looking chart. It does look like we're overdone. We might see it chop around for a bit before we do see it go lower. But if we take a look at the small caps, the venture exchange, and just zoom in here, you can see where we're at. Continuously poking to new nominal new lows. We're back up to a moving average. We're back up into resistance zone. Started to roll over there yesterday. And we see this kind of follow suit even with a lot of gold miners. We're seeing gold miners being overbought. We're ready for a pullback. I wouldn't be surprised if we see this index pull all the way back. It's hard to play the venture exchange. It's really hard to, you can't short penny stocks. This is a way you can do it. There are some ETFs for it. I know a couple of them were delisted recently, so you can't trade it. So I'm looking for a good Toronto Venture Exchange ETF that we can short, so we can actually profit from falling penny stocks in these micro cap companies, because there's a lot of money to be made when these companies they're out of favor still. They will soon be in favor, I think, but right now they're still way out of favor. And if we just go to the monthly chart, take a look at this. you can see where we are in the grand scheme of things. Major bear market in penny stocks continues to work itself down. We've broken the 2008 lows here, and eventually we're going to enter a new major bull market for these stocks, but it has yet to come, and there's still potentially a lot more downside ahead of it. So that's kind of where we're at, and give you an idea where the Canadian market is at. Anyways, that's it for now. Take care. Bye bye.